the S&P 500 daily chart looking back to the end of this correction wave in 2018. Then it printed the 1, 2, 3, 4 D wave, up wave, and 5 printed where this plus is at when it surpassed the high of this bar where the 3 printed. And then it had the correction wave, probably the A, and then it came back up and the 5 shifted. And during the COVID crash, same thing, A, and then B, and then B kept climbing and surpassed this high where the 5 left off, and then it just shifted like that endlessly until it finally gave up at the beginning of 2022 with this D wave up wave 5 and D wave down wave 0. And now we have the D wave 5 up and the D wave A down printed up here, and it's about to surpass that and get a shift and print the D wave up wave 5 and the D wave down wave C. And with the Bollinger Band switched on for this daily chart, we can see the squeeze is getting a little bit tighter every day. I'll zoom into the current area now. But first we'll stop here in May of 2023 and look at this Bollinger Band squeeze. You can see the upper and lower band with the pincher, and then it just squeezed everything right here during this period where it went sideways, one big scare underneath the lower Bollinger Band, and it printed a ATM trend bar down. But then that was just one day, and the next day it jumped right back up into it, and you can see it stayed south of the mid band for a while, and then when it jumped up above it here on May 17th, the rest is history. One more test of the lower band here, but no red downtrend bar, and then it really took off. So that's the Bollinger Band squeeze right here. And fast forward to the current day, and you can see the pincher here, and let's see what happens. Tomorrow's CPI, we could just blast out to the upside, or it could blast out to the downside. You never know. I don't know if it could actually pull off a sideways action after tomorrow. The channel 3 high and the upper Stark band are still traveling together around 48.11. You can see the upper Bollinger Band right above them and making its way down towards them, so pretty good resistance there. And here's the Bollinger Band mid-band at that level, loosely following the 20 simple moving average, but I have the band set to track true high for price, so that skews it to the upside a little off of the 20 simple moving average. It's a little higher than that. Conversion line is right underneath the Bollinger Band mid-band. And I thought for sure today that price was going to close above the ongoing supply line at that level for a qualification, and then Fed Williams came in and did some Fed speak, talked it down a little bit. All the robots and algorithms parsed his words and sent things down, and then they promptly turned it around and came back up. So it needs a gap up above it, this level, for tomorrow on the 11th, and then close above it, and it will become qualified. And it won't take much of a downside action to open lower and then tick a little lower, and then the difference between this high and the close, and then subtracted from this low here. And then if it ticks down, whatever that value is, probably somewhere around the conversion line, bounce off of that, and then close above it, it will become qualified that way on an open reverse break. And then a straight up close below this ongoing demand line for the 11th end of day will qualify that. Same thing with this one. If there's a bad CPI report. And you can see the difference between the Bollinger Band mid-band at that level and the 20 simple moving average in solid blue at that level. Just a little bit of a difference. That's that true high for the Bollinger Bands. EMA 21 is still underneath the 20 simple moving average, and an impulsive move to the upside will probably take care of that in one day if there's a real jump up. And zoomed way in on this S&P 500 daily chart, you can see that there was a close above the relative retracement up 3, which is now qualified, as there was an up close followed by a down close and followed by an up close above that level in question, that relative retracement up 3 right there. So if it opens higher tomorrow on a good CPI report and then ticks higher than this high and closes higher than this close, end of day on the 11th, this becomes qualified and confirmed, and then for sure it's up to try to tag the qualified and confirmed propulsion exhaustion up for 100% here. And there's another relative retracement up level, up 4 at that level. Head south big time, probably blast right through the conversion line and maybe bounce off of the baseline, go back under it maybe, and get under the 50% and 100% momentum down and this trend factor down 1, and they both become qualified with a close below them for end of day on the 11th. And then the ARC 0.618 is right there at 4645.84 now. There's the 0.74, 4527.02, and the magnet levels in the cloud down there. And if this becomes qualified, then this propulsion exhaustion down at 41.66 is qualified also. And the QQE fast is turned around and pointed up. It wants to get back above the slow again up there in the nosebleed section, maybe even make it back above 70 again. Like this was really incredible. This was the only time I've ever seen this slow going back above the fast, above the overbought 70 was incredible. And get above this high, wherever that bar is buried here, where that 5A is at, get above that high, and the zigzag will straighten out and will still be pointed up. And we will get that shift for 5C, and then we wait for zigzag to have a swing point to the downside and see what happens then. And in the S&P 500 daily chart, with every combo and sequential known to DeMark on there, not everything prints, but we certainly do get the risk levels. And price had that recovery today and closed above this risk level here for the aggressive sequential, and I believe the aggressive combo too. So yeah, there was a close 47.83. This is at 47.82 something. So same thing with those two risk levels. Get an open higher than this close, tick higher than that high, and close higher than this close for end of day on the 11th. Then these two become qualified and confirmed, and I'm sure by then we've already blasted through these risk levels here, the straight up sequential and combo, and we can qualify and confirm those on the fly from the upside probably, if that happens. And the S&P 500 weekly chart with every combo and sequential known to DeMark on there. Again, we print the aggressive, sequential and combo, and the regular combo and sequential. And The sequential sell countdown 12 is still hanging up there. It didn't make it today, as this close was 4783.45, and it needed to have a close above this high, 4793.30, so that didn't happen, and it could be an easy beat tomorrow with any kind of upside. Then the sequential sell countdown 13 will have printed in. That pretty much puts everything on 13s. And again, this is a weekly chart, and there's two ways to get rid of the 13s. So either it continues this run after the sell setup 9 end count completion. We're on an 11, so if it makes it up to 18, so it has 7 more weeks in a row of upside, and it prints an 18, then these will turn to R's for recycle, all of these 13s. Or it heads south and goes on the big straight to the downside to print the buy setup 9 end count down here somewhere. And even though these will stay printed as 13s, that pretty much negates them for any downside price action associated with all of these, as if it prints the buy setup 9 end count, that's pretty far down here, and that's a long time, 9 weeks. And I can't see any sideways action happening after the CPI tomorrow, unless it just nails the levels that they're predicting, which are, again, we saw this yesterday. So headline CPI is predicted to get a little worse, 1/10, and then core CPI year over year is supposed to get better by 2/10. So if everything looks like this tomorrow, in other words, it's just status quo for what they predict, maybe some sideways action. I still think that will bring upside price action. I don't think it's going to skyrocket unless it gets beat across the board, or it will sink like a rock into the abyss if there's a surprise miss and inflation comes in hotter across the board. It always adds color, those kind of reports, for tomorrow morning.